Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 16th, 2025, and we're diving into the latest earnings report from Cohen Steers, a leading global investment manager specializing in real assets and alternative income. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. I'm excited to discuss Cohen Steers' performance this quarter.
Revenue and profitability overview. Let's start with the top line. Cohen Steers reported a revenue of $141.7 million for the third quarter of 2025, which is a 4.1% increase from the previous quarter. John, can you elaborate on what drove this growth?
Absolutely. The increase in revenue was primarily driven by higher investment advisory and administration fees, which rose due to an increase in average assets under management and an additional day in the quarter. This growth in revenue translated into a solid operating income of $48.9 million, up 12.9% from the previous quarter, and a net income of $41.7 million, reflecting a 13.2% increase.
And what about their operating margin?
The operating margin improved to 34.5% from 31.8% in the previous quarter, indicating better cost management and operational efficiencies.
EPS performance and analyst expectations. Now let's talk about earnings per share. Cohen Steers reported an adjusted EPS of 81 cents, beating the analyst forecast of 78 cents. John, what does this tell us about the company's performance?
This is a positive indicator. Beating the EPS forecast, even with just one analyst covering, shows that Cohen Steers is performing well above expectations. The adjusted EPS of 81 cents reflects the company's ability to manage its expenses effectively while growing its revenue base.
Assets under management and inflows. Let's shift our focus to assets under management. Cohen Steers reported an ending AUM of $90.9 billion with net inflows of $233 million. What are the key factors contributing to these figures?
The increase in AUM was driven by net inflows and significant market appreciation of $2.4 billion. However, this was partially offset by distributions of $627 million. The net inflows indicate strong investor confidence and effective fund management strategies.
Operational efficiencies and future outlook. John, let's discuss the operational side. Employee compensation saw a slight increase, but general and administrative expenses decreased by 7.2%. How does this impact the company's future outlook?
The decrease in general and administrative expenses, primarily due to lower travel and talent acquisition costs, suggests that Cohen Steers is optimizing its operational efficiency. This positions the company well for future growth as they continue to manage costs effectively while expanding their asset base.